This is Nick Radge, Manager for the Harbourside Capital Multi-Strategy Wholesale Investment Program, and we're going to talk about our results for September. And September brings the end of Q3 and a little bit of changing of the guard going on potentially, which is a good thing. The US market has really been holding our portfolio together over the last 18 months, and there's a few signs coming along that potentially we may be seeing the Australian market playing a little bit of catch-up, which would be a good thing. So going into September, our portfolio closed up 4.95% for the month versus our index or our benchmark, the Russell 1000 total return, which was up 2.10%. Since inception, our annualized return has been 19.49% for a total return of 291% versus the benchmark 187%. Key highlights for the month of September. The ASX did kick a little bit higher. It was a little bit weaker to start with, but kicked nicely into the close of the month, mainly on the back of a China rebound. And the Shanghai Composite rallied 24% in a 2-week period, which we'll take a look at very shortly. So all in all, the Australian market trend remains up. We will remain invested for October. As I've been saying in more recent reviews, the Australian market has been sitting above a major level of support. And for that to hold, we would need, or should that hold, we should, in theory, test all-time highs, which we're lagging in the small cap part of the market. In the US, there was a lot of talk about September being the weakest month of the year, and that really failed to show. There was a little bit of early weakness, about 4% in the Russell, and that reversed, and that market closed up about 2% for the month. The Federal Reserve cut their interest rates by 50 basis points. However, Fed's Powell did come out and say there's no rush to cut again. We're going to see a lot more focus on the election, dare I say that, over the next 4 to 6 weeks. Obviously, the election is not far away now, so expect to see that rhetoric wind up in that due course. So all in all, we're looking here at Australian and China-facing stocks to potentially outperform US tech in this last quarter, and that would be very, very good. As I said, Australian market has been lagging the US over the last 18 months or so. In the last month, we saw a lot of global institutions buying Chinese ETFs over the US tech ETFs. So if that view expands, we might see some further upside bullishness in the Australian market driven by that China. And obviously, Middle East tensions continue to deepen over there, so pundits will be keeping a close eye on that. Quick look at a chart here of China. This is the Shanghai Composite Index, and you can see it came screaming out of the blocks there, up about 24% in 2 weeks. It was in the doldrums, just trending down very, very gradually, but some stimulus there has got it going very, very nicely. We've seen this before, so let's see if it can't be sustained and continue to kick on. In our portfolio, in the Australian side of the portfolio, our winners and losers, Tuas was up 24.7%, Regis up 22.2%, and Catapult up 14.6%. HMC was the biggest loser, down 3.1%. Always nice to see a small loss there. Now all those positions will be held into the next month, and we'll only have one switch out of the Australian market in the portfolio. In the US portfolio, AppLoving really came out of the blocks hard, up 41%. A couple of others there added single digits, and Dick's Sporting, which we only added to the portfolio last month, it dropped 11.5%, and that one will come out. So there'll be 2 changes in the US portfolio this month. So all in all, relatively quiet, and we'll continue to remain fully invested through till October. As usual, if you have any questions or queries, feel free to reach out. I'll be happy to answer them for you.